Welcome to No Easy Answer. I'm Cameron Carter, and today we're going to be talking about a number of different theories as to why President Trump may have removed President Maduro from Venezuela. What were his potential motivations? I want to focus on one set of theories in particular today, and hopefully in the next set we can address some of the other major reasons or considerations as to why that might have happened. I want to avoid speculation because the truth is we may not even know ever what the complete set of motivations were, as if it would just only be one to take this action. And in a grand sense, some of these motivations aren't necessarily important to understand aside from just our own morbid curiosity. But the real question is, do any of these particular motivations or any of these potential outlooks, do they benefit the people of Venezuela? And how do they affect and benefit the people of the United States and the rest of the world at large? That's a perspective I want to look at. Again, I lived in Venezuela for 6 years, from 2007 to 2013, as a Christian missionary, and I absolutely loved my time there. I loved the Venezuelan people and how they took me in, and our entire team, and it was a huge blessing to be there. And so I feel like I have something to offer for the understanding of what the culture is like, what the people like, and a little bit of the context of what Venezuela is like. In a previous video, you can take a look at that. I discussed who is actually running Venezuela, and it became very clear that the Venezuelan government is running Venezuela. The removal of Maduro really did not change anything for the Venezuelan people. It did not change anything for the Venezuelan government. It continues to click along as it was before, and that's going to be the situation and the context in which we continue to work with this. Just a note that I forgot to mention last video, the Venezuelan government currently employs about 2.5 million people, which is a lot. That's a lot of people for the size of the country. For a point of comparison, the federal government in the United States employs about 2.9 people and has anywhere from 10 to 15 times the population of Venezuela. So just taking that into consideration, if the idea was to try to remove the government, it would be a very long and drawn out process and not an easy thing to do. So I tried to categorize all the different theories as to why Maduro may have been removed, and they center around 5 general categories. One being resource-centered theories, monetary-centered theories, U.S. foreign policy-centered theories, Trump-centered theories, and Venezuelan-centered theories. And again, as I mentioned, I would expect that the reality and the truth is going to be some set of compilation of all these different theories. It assumes, again, that people are acting rationally, but when we talk about these different theories, we'll get into the different possibilities there. I know, personally, if I come up with an idea, the more I think about the idea, the more I try to justify that idea. And my guess is this idea I popped into President Trump's head or somebody else's head, and the more they thought about it, the more benefits they thought they could get from this move. And so I'm sure there's a number of different things that address this. So as we go through, we'll address all these. Today, I'm not going to focus on all these different theories. Today, I only want to focus on resource-centered theories. So is this really about oil? And could it potentially be about minerals? We're going to examine both of these. Now, I'm kind of dumb in that I think sometimes the best way to find out the truth of a matter is with a calculator. So we're going to do some calculations. So hold on. Don't worry. It's not going to be hard math, but we'll get there. Yesterday on Truth Social, President Trump made a post, basically saying that the United States would be receiving anywhere from 30 million to 50 million barrels of Venezuelan oil, sanctioned oil in particular. And I saw a lot of reaction, people saying, oh, look, there it is. That's the proof that we're getting Venezuelan oil. Just to be clear, what is this particular oil that he's talking about? So the daily Venezuelan production can range anywhere from 900,000 barrels per day to for 1.1 million barrels per day. So it varies. But really, this amount of production sits about 34 to 56 days of production. And that really corresponds to the time under which the United States began to create this effective naval blockade of Venezuelan oil leaving the country. We saw many cases where oil tankers were boarded and taken over. And so the Venezuelans, instead of shipping out the oil, for the most part, they began to hold back a lot of this oil on shore. So this is the oil that Trump is talking about. And apparently there's been an agreement with the Venezuelan government for the government to give this oil or turn it over, sell. Good question. to the United States company, refineries. We really don't know. That's going to go. Just to keep this in perspective, though, I want to make this clear, and let me see if I can drive myself over a little bit. The U.S. daily production of oil is about 22 million barrels per day. So this is not a large amount of oil compared to what's produced domestically, even in this moment where oil is very cheap and there's not a huge encouragement to do a lot of national production. So we're talking about 1.4 to 2.3 days of production here in the United States for what this oil is coming from the United States. So don't think like the prices at the pump are going to drop by $1 or something like that. That's very unlikely. Now, CNN recently put out an article making the question is like, does big oil share Trump's dream of making Venezuela oil great again? And NPR also reported on this even prior to the removal of Maduro, that many oil companies were reticent to jump into Venezuela even if Maduro was removed. And I want to look into a little bit of why that is. Because I think if we run the numbers, it's going to be pretty evident as to what's going on. So in that CNN article, I'm going to jump to small face, they mentioned two sets of numbers. The first is that in order to essentially maintain the Venezuelan production of oil as it stands today, they believe it would require an investment of about $15 billion over 15 years in order to continue this production of what they are estimating to be 1.1 million barrels of oil per day. So that's our first set of investment. So just to maintain things as they stand right now, because the infrastructure is falling apart, and there's reasons for that I'm not going to get into today, $53 billion over 15 years for just to keep producing around 1 million barrels per gallon, 1 million barrels per day. They also indicated that if they want to, if the oil companies wanted to make investments within Venezuela to increase their capacity to go back to what their highest, in this article is referenced as their highest rate of production being 3 million barrels per day, it would take around $183 billion over a 25-year period. All right. So here's how we're going to analyze this. And basically, we're going to kind of do the opposite of what you would typically do if you're kind of a pessimistic person. We're going to look at the most optimistic case here to see if there actually is any sort of potential to make money as an investor looking into Venezuelan oil. All right. So again, these numbers could be off. They're most likely off. These are just guesses. And I'm going to assume, and we're just run with these numbers as they stand right now. So here's the situation to make this look as best as possible. And even if running the numbers as best as possible doesn't work out, that's going to tell us that there really is no future for investing in Venezuelan oil. If we do run these numbers and it turns out there is a good investment opportunity, then we have to be a little more realistic and begin to apply more realistic conditions to see if it still holds up. But even if in the best case scenario it doesn't hold up, we know the gig is up. So what are the conditions we're going to apply here? We're going to assume that this $53 billion or this $183 billion investment, we're going to assume that these companies are going to do this with interest-free loans, that they're going to be able to pay out of pocket this amount of money in order to get this return on oil. Second, we're going to assume that beginning day one of investment, they are getting the stipulated amount of oil back. So that means even for the $183 billion investment, which they're going to have to go in, build roads, build infrastructure, get in, dig wells, create pipelines, and then move it to the coast to be able to transport all this, we're going to assume that even from day one, the minute they make the first payment, they are already getting 3 million barrels per day of oil, which is completely unrealistic. But let's just see if they were to do this, does it work out? Now, what price? Now, right now, Venezuelan oil is actually held lower than the typical price of Brent crude. Number one, there's quality issues because it is a heavy form of petroleum. And two, because of sanctions, it really is not allowed, quote unquote, in the world market. So it really trades at a lower price. So that's anywhere from $14 to $20 less per barrel. Nonetheless, we're going to assume that in the future, when they actually start making these investments, that they can actually sell at current prices. Now, let's just take an easy number, $60 per barrel, to go from there. All right, so those are our conditions. Again, interest-free loans, interest-free investment. They're going to be able to extract the stipulated amount of oil from day one, and then we're going to run this for the total years that it's going to say that it's going to take to build this out. We're going to see if it actually works out. Okay. So let's look at this first case. So $53 billion over 15 years for 1.1 million barrels per day. That means over that period of 15 years, you're going to make $362 billion of sales over 15 years. And again, this is for $60 per barrel. And then we're producing 1.1 million barrels per day and then 365.25 because we got leap years in there to actually figure out what we get. So that puts us at $362 billion of total sales over this time of investment. Now, it also takes money to produce oil. And so when you look this up, there are break-even estimates. And those estimates for break-even oil can really range. So we have a low range of $42 and we can go up to $56 per barrel. I'm going to assume, just again, in this best case scenario, that the break-even is estimated at $42 per barrel, meaning every barrel is producing $18 of profit. Okay? So we're going to extract this break-even price from the sale price of the oil, and we're going to extract the investment cost, this initial investment cost from there. And let's see after 15 years where they end up. So after removing the break-even price, after removing the initial investment, we end up with about $56 billion of profit. Meaning, you put in $53 billion on day one, instantly, boom, you got infrastructure, and you begin to extract the current rate. Then after 15 years, you've got $56 billion back, plus another $53 billion back from your initial thing. So this is a return on investment. So basically what we're going to say is the return on investment is going to be defined as how much you put in divided by, or over, how much you get back over how much you put in over this period of 15 years. So that gives you, and then you multiply that by 100 to get your percentage. So that gives you a return on investment of 106%. Meaning, I put in 53, I get my 53 back, and I get another 56 on top of that. And that is a return on investment of 106%. Now, this number in parentheses here, that 7 to 10 years, that is general estimate, general idea, general more or less historical average of if you were to, how long it would take to get the same return on investment if you were to invest in the Standard & Poor's 500. So if you show up with $53 million to the stock market and say, sir, I would like your finest S&P 500, $53 billion worth, in a period of 7-10 years, you will get that money back at the same return on investment. So you'll get your $53 billion back and you'll get $56 billion back. Meaning, even in the worst case scenario for investment, typically speaking, you can get that same amount of money back in 10 years instead of 15. All right, well, let's look at this other case. Again, you're gonna have to wait 15 years to get the same return on investment for something you can get just by investing in the stock market, not spending a dime. Okay, let's look at this other case where you can get more production, but we're gonna have to invest more as well. So now we're gonna invest $183 billion over 25 years to be able to produce 3 million barrels per day. Now, again, assuming from day one, we're starting to sell 3 million barrels per day at $60, and again, not accounting for inflation, we're just gonna use the current price and just see how this plays out. So that equates to about $1.64 trillion in sales. That's a lot of money over 25 years. Again, with the same break even, using the lowest break even amount, $42. What do we get after all of our investment and break even is taken out? We get about $310 billion back. Meaning you put in 183, and then over the next 25 years, you get 310 billion over 25 years. This return on investment is 169%, a lot better, but it's over a very long time span. In investing, if you do this, then you can get that return on investment back in 10 to 11 years. Meaning in less than half the time, you can put in $103 billion and get 310 back as profit. It should be very evident that these are really bad investment possibilities. Anyone that looks at these numbers is going to look at that. Now, there's some problems with these numbers. Again, perhaps the break-even amount should actually include the initial investment. But again, even the initial investment isn't that much. We could break that out, the 183 billion, and add it or include it into the break-even. And I don't think you're going to see a huge change in these ROIs. The fact is, the ROI is not high. You're going to have to spend a lot of money, and you have a potential ROI that's going to come back, and it's not great compared to other investment opportunities or potential other places where you could extract oil from. And on top of that, investing in Venezuela with oil infrastructure is incredibly risky. You don't know when you're going to be getting your investment back. You don't know how long the government is going to stay positive with the United States. I mean, if I was Venezuela and I'm in the situation I'm in now, the Venezuelan government, and now I have to respond to Trump, otherwise I'm under the threat of military power to remove myself as sitting president, but I see that he's trying to get investment in my country, I'm going to be very docile for the next period of time. I'm going to let him come in, and I'm going to try to keep everything nice and calm so that they come in, they invest, and they build my country for me. They build up the infrastructure, they build up the electricity, they build up the roads, they build all the infrastructure, and they're good to go. And then, depending who's president or what the current, political climate is, I'm going to look for that moments where I can go and I can then kick them out. And so I get all this free infrastructure built for me, and then I come back and then take it back over. I mean, if you're an oil exec, this is on your mind. You're thinking about this, and you're not in a position where you're thinking, yeah, I'm just going to go ahead and drop all this money in order to potentially get this money back. And again, the reality is you don't get this money back the minute you start investing. You have to invest $83 billion for 25 years, and slowly over that time, your production is going to be increasing. So really, this return on investment is actually much lower when you consider it. And you're going to be losing other investment opportunities that you could be making at the same period of time. So it really is a high risk. It is really a high risk investment to make. So again, if I was an oil exec, I would not be making this thing. Now, on top of that, there's other considerations as well. Number one is that the price of oil is really kind of at a 5-year low. As you look at oil right now, we're extremely low on the terms of price of oil. This is a little chart. Again, this was taken, I think, on that Saturday or that Sunday after Maduro's removal. Those are at around 57. I think we got up to 60 or something around there. We're at a real low price of oil currently for the past 5 years. This is not a typical point where you're going to look at investment thinking to make it. I found this chart that was made some point in 2015, somewhere around there, 2012. And it is comparing U.S. oil prices in 2005. Now, at that point, interestingly enough, they had anticipated that the price would either, the worst case scenario in the 2012 projectors' minds, stall out around 46, or best case scenario for the oil execs, it'd go up to 207. Interestingly enough, there was that time, in the late 2000s when oil was selling for about $100 a barrel, but obviously inflation, that's what it looked like. That was also corresponded with the peak of Venezuela's prosperity. Although I will say, while I was in Venezuela, oil was a big part of the economy. However, when you looked at the actual amount of income that the government generated, it generated much more income through collecting taxes on businesses than it did through the sale of oil, interestingly enough. But there was that peak there where there felt like there's a lot of money flowing around all over the place. And then after that, it absolutely crashed. Really right when Chavez began to get sick, we saw this crash in the price of oil, and that had major effects in oil-producing countries. Now, the funny thing about this chart is that when you look at the current price, let's say it's $60 a barrel today, and then you back out inflation, that actually puts it at around $36.50 in 2020 and 2005 dollars. Meaning that even this very pessimistic projection that the oil companies or whoever put this together back in 2012, they are much worse than they anticipated. Truth is, oil right now is incredibly cheap, and it's unknown when it will go back up. Again, if you're an oil exec, you're thinking about this. Is oil price actually going to go back up? Because now you're talking about potentially increasing production. But even if you go to Venezuela, how much production are you increasing it by? When you look at oil production, right now, the peak producer of oil in the world is, surprise, the United States. What almost double what Saudi Arabia is producing, far and above what Iraq or the United Arab Emirates or any other country that might be producing. We're producing far and away more oil than everything is. Now, can we sustain it in the long run? I don't know. That's a good question. But even then, I know that a lot of the oil fields here in the United States are pretty empty. They're not, the oil business is not booming right now in the United States, and yet we have a very high production. So the oil companies are able to produce a lot of oil with very little labor input. And again, I don't see that they're going to be in a rush to go out and spend billions of dollars to increase their infrastructure in a risky area to maybe not get anything back for it. Here's another little graph I found that talks about the oil production. Again, by the time we get to 2023, you can see Venezuela is way down here. It's like way down at the very bottom in terms of actual, like, over the past 100 years, how much oil was produced across the entire world. It's way down there. Again, this is not daily rates. This is like total amount of oil that's been produced. So Venezuela is not a huge oil producer. Yes, it has the biggest oil reserves in the world, but that doesn't mean it's actually producing it. So again, it's one of those things. In terms of actual demand, if you're looking at demand, sure, demand has increased from the 1960s and really from, pre-industrial times up to current times. But when you really zoom in into the current times, looking between 2005 2025, this is not really exciting. This is not a huge increase in demand. We're going from 70, 80 up to just over 100, so a 20% increase over 20 years. So if you're looking at 2025, it's 25 years of investment to be really start to cash in on that investment and get that maximum production. Is the world demand of oil going to be at the spot that you want it to be to really get your investment back? Plus, 25 years from now, that's going to put us right at 2041. That's beginning to knock on the door of when commercially available fusion power might start to become available. Now, again, fusion power has been considered the power source of the future, and it always will be, according to the saying. But there have been big strides made in fusion, and it looks like there's potential of proof of concept coming on pretty soon, assuming society doesn't collapse and go back to the Stone Age. And if it does, then it becomes a question of, if we have proof of concept, how do we actually get commercially viable fusion? Again, that's going to take a number of years and decades to figure out, get regulated, and then come to the market. So even if we had a proof of concept today, I think we're still 25 years out, more or less. But once that happens, really the energy game is up. When you have available fusion power, because you don't need nuclear energy you don't need nuclear materials, you just need pretty basic materials for the fuel. Now the actual construction is a whole set of technical, complicated mess. But once you've done that, the countries that are going to be able to produce fusion, they will have access to a lot of energy. At that point, the energy becomes a question of distribution. How do we get the energy from the generating fusion plant to the consumers? It's not so much about where does the fuel come from, as it uses light elements. We're talking hydrogen, lithium, things that are widely available throughout the universe and this planet. So that's not a scarcity issue. All right, we're on done time. I'm gonna try to keep these below 30 minutes. So as I said, oil investment, it is a high risk, low return option for oil companies, and there's zero guarantees that this would actually benefit the Venezuelan people at any point in the future. Venezuela also has offshore oil. And if I'm an oil exec and I'm uncertain about the future of the country, I want to put my first investment in offshore oil, because that's a better chance I can get my rig back and I can get the oil out of there without much interference from the country. If I have to go onshore, things begin a lot more complicated. From the perspective of the Venezuelan people, they don't get any direct benefits from an offshore drilling rig at all. If anything, they just put themselves at risk from some sort of disaster occurring, which do happen, but it's not frequent, but they do happen. But there's not like you have a bunch of oil workers, that get out on Friday nights and go around town and spend their money, and then that benefits the local populace. That just does not happen if people are living offshore. So I just don't see how any of this is number one really going to happen. I mean, it's really a question of whether we're going to have a lot of investment. Number two is I'm not sure how this actually benefits the people of Venezuela at all. I don't really see how it makes much of an effect because the production percentages are so low. How does this actually affect the United States? There is one aspect where oil does become more important, but that's when we talk about foreign policy. But that'll be another show. What about minerals? There's been a lot of talk about minerals potentially being used for Venezuela. And that is certainly a possibility. So let's see what Venezuela's got for minerals. So for Venezuela, we see that they've got, sorry, let me see if I can make myself a little bit better here so you can actually see what's going on. We've got boomer graphics, everybody. All right, so Venezuela's underground wealth, there are a number of minerals that Venezuela has access to. There's a number of things that they have in these different areas. So you have the Orinoco mining arc, which is this area kind of in the central that goes across from the city of Amazonas. That's that little blue dot in like the armpit there of the country in the southwest corner. And then it extends out to the east and continues there. The Orinoco is an area of jungle and mountains. It's a pretty amazing area. By the time you go all the way from the Orinoco far out to the east, that's going to put you in the area of the Tupuis, which are these big just land formations where they have a large structure that's horizontal on top and then a vertical wall coming down. The movie Up is about Tupuis. It's the place where they landed with a little bird on top. That's a Tupui. Angel Falls, the largest waterfall in the world, that's in that same area. Well, this belt extends all the way over to there, and that's where a lot of these minerals are being considered to be known in quotes, if they actually are known or not. Again, we have other indications of what these minerals might be. Again, we got a list here. If you get my bald spot, we got bauxite, which is aluminum. We got cassiterite, copper, coltan, graphite, iron, manganese, nickel, rare earth elements, tungsten, and uranium. Now, why is this even important? Why is this even a consideration? Why would it be a motivation to remove Maduro? So it turns out there are critical minerals that the United States has identified that are critical for industry in the United States, but more so critical for defense components in the United States. It was kind of surprised during COVID that everyone realized, all of our technology, a lot of our critical infrastructure for defense, those are made from elements that come out of China. And that kind of made everyone to kind of have a moment where they realized, we need to fix this. And so they changed the way they want to consider minerals, and they realized we need to get these minerals under U.S. control. So instead of working with China, the question becomes, how can we actually get these minerals here? Now, it looks like there's about 15 of these critical minerals that might be able to be found in Venezuela. Again, there's not a guarantee that we know these things are in Venezuela. There's reports, but how valid are the reports? We don't know. Could there be more? Could there be less? Yes. I mean, those are all potentials. But again, we're talking about potentials. We're not talking about real documented sources. With these estimates, the issue is, okay, so if we have 15 of these minerals that are found in Venezuela, does this make sense to go to Venezuela to get these minerals? Well, it does, but here's the thing. There's really only a few of these minerals that aren't in the United States. Really only got 3. Niobium, tantalum, and coltan are not known to show up in the US. The rest of the things are. So if it is about minerals, then we're going there just for 3. Now, if you don't got it, you don't got it. That's the reality. If you need it, and you don't have it, you got to find somewhere that's got it. So maybe this is just a move for 3 of these things. But beyond that, I think the bigger question is, what does it take to extract these minerals? That's a very difficult process. Nonetheless, we have the Big Beautiful Bill. This allocated $7 billion for critical minerals for national security. $2 billion of that is to create a stockpile of these minerals, then $5 billion is to go out and go find it around the world. And again, China processes 91% of rare earth minerals and 60 to 95% of critical minerals. So there definitely is interest to do that. But again, we have many of these in United States territories. There's only a few that we don't have of the ones that are in Venezuela, at least, that are not here. And again, if you got to get it, you got to get it. The problem is with rare earth mineral processing, it is an extremely damaging process. It destroys the environment around it. So, for example, I encourage you to look up the Baogang tailings dam in China. There is this lake where China produces many of its rare earth minerals, not all of them. So everything that goes in your electronics, your phone, computers, cars, EVs, everything. Those rare earths come out of this place in China and they get processed there. And there's this just ugly, ugly lake that has been destroyed, where all of the tailings from the processing of this, which involves very nasty chemicals, just goes out. And they've collected samples from this lake. It's radioactive. It's a mess. So this is a huge eyesore. And I could see why the United States would want to avoid doing this within the confines of the United States. It's an environmental disaster. If you can go to another country that does not have environmental regulations, or you can say ignore your environmental regulations, then you have a much better chance to process those things over there and then import it into your own country. And I can see why that would happen. I can see where the United States would say, hey, we need coltan, we don't have it. We need tantalum, we don't have it. We're going to go and we're going to get these things out of Venezuela, process it there, and then bring it here and let them deal with the economic and environmental disaster that comes out of there. But how does that help the people of Venezuela? It doesn't. It really doesn't. So, generally speaking, oil, it just doesn't add up. When you look at the numbers, it just really does not add up. It doesn't make sense that oil was the motivation. As much as Trump says that oil is the reason for going in there, it just really does not add up on paper. As much as everyone says it's all about oil, it really, in my mind, is very clear that it is not about oil. Minerals, potentially. There is a potential argument. Does it make sense to remove the head of a government just to get 3 minerals that you might be able to find somewhere else or might be able to find with an allied country? I don't know. That's a big jump. It feels to me like the minerals are kind of icing on the cake. This is something else you can get, or it's part of a set of reasons that can bring the actual motivation to bear. And then finally, like I said, none of this really provides a benefit to the people of Venezuela. Again, potential benefit to the people of the United States with supporting defense and other mechanisms through the acquisition of these critical minerals. But it's not like just you or me are going to see any, benefit to us just straight out of the bag based on these criteria. So there you have it. I don't think it's oil. Minerals is maybe it's a possibility, but I don't think it's a strong case. Next episode, we're going to look at these other possibilities as to why these, what may have been the motivations to remove Maduro. Hopefully, we can get through the majority of them, and then we'll keep going from there. So, Lord bless you. Thank you for following along. Do good, seek out the good, and we will see you soon.